Welcome to Tradespoon. My name is Like Arpel. I'm CEO and founder of Tradespoon, and today I'd like to go over current market conditions and trade of the day. Before we begin, please take a look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risks and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's take a look at the current market conditions. First, let's look at the spiders. We can see that based on the model, this is a stock forecast toolbox model that makes predictions for stocks, futures, and forex. This is a 10-day prediction. Shows the 10-day trend, one-day trend. Currently showing going into FOMC meeting, which will take place tomorrow. And we'll know the results tomorrow, and then market potentially can be volatile throughout this week. Going into the FOMC decision, positive trend for the next 10 days, support at 300, overhead resistance at 302. We can see market is staying at this key psychological level 300. Now looking at the seasonal chart, it's a different model. It's optimized to make predictions for the next 50 days. It looks in the past 25 years worth of data. So it analyzes a lot more data, makes longer term predictions. Model runs once a week, Sunday at 6 p.m. And right now for spiders, it shows 3 out of 4 predictions are higher. So if you look at the seasonality, basically model says short term, usually markets is volatile in August and September. Sometimes in September or October, it can reach close to the August levels, lows. And then once the earnings season starts in October, usually market makes a new rally. So I think based on the FOMC decision and potential de-escalation between China and United States tariffs, China officials are meeting this week with United States official. Potential for at least interim meeting can take place. So short term, I think as a result of this reaction, we can see a volatility, but then longer term, November, December, I think market will do what it usually does. And we have the end of the year rally starting sometime end of October, beginning of November. Currently market again at a key psychological level 300, touched all-time low, and right now trades between all-time low and 50-day moving average around 296, 295. So I would keep an eye on the 296, 295 level. That's 200-day moving. That's the 50-day moving average support, and then overhead resistance at 300. From the trading psychology point of view, I would encourage you to review Yellow Tunnel. It's a free site. It's a sister company of Tradespoon where we specialize in trading psychology. So I created more details about my own view on the market. You can look at it. I just posted on Sunday. And it also goes over different exercises you can do from trading psychology point of view to be prepared for different outcomes that can happen in the next 2 weeks. So I think in terms of complacency, you do not want to be complacent. You want to spend time rebalancing your portfolio for appropriately if the volatility jumps in the next 2 weeks. What drives the market? FOMC decision. So interest rate cut is expected at least 25 basis points, but everybody's looking for more of a forward-looking guidance, and also meeting between the United States and China officials, and obviously escalation in terms of oil supply issues in Saudi Arabia, and escalation with Iran. How do you trade in current market condition? We have different models: active trader, weekly trader, monthly trader. I'm looking at the weekly trader model. So this week we posted CB. So insurance companies have been leading the market. This is a weekly model. The idea is to hold the position for 2 to 5 days based on our model that makes prediction for the 1 week. So the signals are posted on Sunday night, and usually you hold the position sometime between Monday and Friday. Could be 1 day, it could be 4 days. So we'll see where the insurance company end up. The idea was to buy at 158.94. Right now it's trading around 159.21, so slightly higher, about 20 basis points. You can see all of our trades, long-term and short-term trades from all of the models. Not only do we provide these signals, we trade them. Here's the trades in live trading room. This is an example of the weekly model and the monthly model. You can see that not only do I provide signals, we actually trade them in the live trading room environment. So you can see BBT bought a December contract for $1.86, closed halfway to 87, halfway at 314. So these are the examples of the option and stock trades we do in the live trading room. I encourage you to register for Active Investor Workshop. We have live trading, live workshop where we answer live your questions, and we also cover different topics. This will take place actually today at 3:30 p.m. every other Tuesday. So register. When you get a chance, you will be able to participate live and get a recording. And the link is here, tradespoon.com/workshops. And finally, please follow us on social media for the latest market commentary news. Thank you very much and have a great day. And again, if one of those feelings you have is complacency, this is the most appropriate time to review your portfolio to make sure you're ready for both outcomes of FOMC decision and China-US negotiations. Thank you.